Thank you for joining us and welcome to Business Morning. I'm Laddie Williams.
And I'm Chimeze Obi Iwagu. Let's kick off with what's on the news as far as business is concerned. Yesterday being the first trading day of the week, of course, the year, we saw some kind of uncertainty in the foreign exchange market. The Naira appreciated at the investors and exporters window, closing at 394 Naira against the dollar. At the last trading day in December 2020, the local currency traded at 410 Naira to the dollar, which signaled the central bank may be adjusting the Naira to its fair value. But what exactly is going on there? Let's hear from Victor Aluyi, Head Portfolio Management at Commercial Partners. Good morning, Victor. Happy New Year to you.
Happy New Year.
Now, from an analyst's point of view, what are you seeing playing out in the foreign exchange market at the moment? Naira traded at 410 Naira on December 31st, and yesterday it appreciated to 394 Naira to the dollar.
Well, I think we're essentially continuing to see the Apex Bank trying to adjust that currency. Given what had happened yesterday, that adjustment we saw has been described as probably some sort of year-end adjustment. But also recall that, in the course of the year, we've essentially seen two adjustments from 306 to about 360 in March, and then the other adjustment in August that took it from 360 to about 380. Essentially trying to align with that iron in window. I think that these are moves by the Apex Bank to continue to try and align, the various markets that we have, within that, exchange rate market.
Now, if you're an investor or a potential investor, what would you do with this signal?
I think it's a strong signal from the Apex Bank, and I think that just on the back of that, it is clear that the Apex Bank would continue to adjust in line with market realities, if you will, and given the macro environment, given where reserves currently sit, if you're also looking at the turnover dynamics within the markets, last year turnover at the earning window was about 36 billion. That is down about 44% compared to the average turnover of over 145 that we saw. To look at reserves, we closed last year with about 35 billion. So there are pressures, there are strains, on the ability of the Apex Bank to continue to, sufficiently guard, the currency. So clearly, we think that there's likely to still be some, further adjustment, down the road.
Well, thank you very much, Victor, for lending your voice there.
Thank
you. Because later on the show, we'll get the take of a trader in the market today, Laddie.
Yeah. In the meantime, the central bank yesterday directed mobile money operators to maintain a minimum of 2 billion Naira as their minimum capital base. The new policy aligns with the CBN's commitment to promote a strong and credible payment system and authorized operators to hold customer funds under its new licensing framework. The CBN further mentions that all payment service providers and stakeholders are required to ensure strict compliance with these requirements and all other payment system regulations.
And in all the developments, the federal government will commence the Special Public Works Program for 774,000 unemployed Nigerians today, January the 5th. The Minister of State for Labor, Festus Keyamo, who made this known on his Twitter handle, says President Buhari had approved the takeoff date of the recruitment scheme across the country. The program was initially scheduled to begin on October the 1st, but was postponed to November the 1st due to floods in some states.
And on the global markets, prices edged down this morning before deadlock talks between major producers about potential changes in February output set to continue later in the day, while fuel demand concerns lingered amid new COVID-19 lockdowns. The Brent crude futures for March fell 12 cents to $50.97 a barrel, while the U.S. West Texas Intermediate crude for February was at $47.56 a barrel, down 6 cents. Both contracts fell more than 1% on Monday after the Organization of the Petroleum Exporting Countries and its allies, a group known as the OPEC Plus, failed to agree on changes to February's oil output. And Saudi Arabia argued against pumping more because of new lockdowns, while Russia led calls for higher production, citing recovering demand. OPEC Plus will resume talks later today.
Definitely. So we'll see what the outcome will eventually be, and we'll talk more about it later.
Yeah.
Okay, the year 2021 is fully stacked with plans and agreements for the full activation of the economic potential of the Nigerian economy as the country heads into the new year with the heavy winds of recession. Some believe the agriculture sector still has the potentials to drive the Nigerian economy towards growth in 2021. CEO, X-Ray Farms Consulting, African farmer Mogaji, joins us next.
Yeah. And CEO X-Ray Farms Consulting, African farmer Mogaji, joins us now. Thank you for joining us and Happy New Year.
Happy New Year. Thanks
Happy
for
New Year
having
to
me.
you.
Yes. So, 2020 was full of challenges. And we're here now, 2021. What have we learned from 2020 regarding the agric sector?
What we learned was primarily that we need to focus on value chain and not production. The primary sector where it's production. We learned the lesson that the value chain is very crucial and that any bottleneck across the value chain would actually make all investments and efforts at the primary level futile.
Yeah. Okay, now we've seen just before Christmas, the government announced the reopening of borders, but then some farmers kicked against it. They were like, look, what you have just done is going to make nonsense of some of the things we have achieved in the agri sector. Are you one of those, that think we shouldn't have even opened that border?
Well, I think it's ignorance to think that the borders will be shut forever. And the challenge I see mostly in Nigeria is you find investors and new players come into the sector basically because of one policy. One policy is not enough to take a decision on a lifetime investment. So you need to look at it round. I always say this, around Africa, not only Nigeria, policies somersault. We need policies change. There's what I call the dynamics of politics, which shoots in 2 years before election, and the pyramid of politics, which shoots in the year before election. All this influences policies. So if they shut the borders and you now take a major investment decision without looking at where should you play, many people go into the primary production where they don't need to play, invest heavily there as against other value chains. And so when they now open the border, people begin to shout. And meanwhile, it was a mismatch of investment. The borders cannot be shut forever. West Africa depends on Nigeria, and many businesses depend on West Africa. So I think it's the investors' mistake flowing on the policy and not also paying attention to benefits of hindsight. What has happened before?
Investors rushed in due to the border closure.
They rushed in due to the border closure without paying attention to mapping 5 years from now, will I still be here?
That brings us back to what you talked about, value chain.
Value chain.
The lesson there,
Yes.
To be learned. Because one question one would ask again is, while the borders were closed, how significant or what did we even achieve? Did we really achieve the purpose for which the borders were shut in the first place?
My honest opinion is I don't think we achieved the purpose. We achieved some, but not all. The system and infrastructures that was required, we didn't put it in place. We shut it, and it triggered artificial interest, artificial opportunity. It triggered a potential opportunity, but we did not position to harness the opportunity. The borders, now that the borders have been opened, what has been done? Customs. Do they have a better monitoring system? Are they using drones now? All this is not in place. We're not hearing about them. So if they will still be smuggling, these things were coming in. I run projects in 2 border points.
Yeah.
And these things are still coming in. Foreign rice is still in the country. Everything is still in the country. So opening the borders without telling us, oh, we have better monitoring system, helicopters are moving around. We don't have all those. So it will just go back to normal. We are all creatures of habit. We reverse to what we want. And people, and I mentioned rice. What I've not heard about rice, because rice was one of the major reasons, apart from smuggling of arms, that they shut the borders. So now we're still focusing on produce, where we've not focused on what does the customer want. What do you want? We want rice, like the caterers who use this in bulk, they still don't want to use local rice because they use more ingredients. I cook and I tested all this, and you use more ingredients, meaning higher cost for them. Yeah. So we should focus really on, can we get quality, what the consumers will buy. If we focus on that, we will now have very good varieties that would be have a comparative advantage.
I remember last year there was this thing about livestock feed. The price had doubled in the market. Was it due to the border closure, and what's the status now?
It wasn't about border closure, really. People just, there was misinformation. It was not about border closure. I recall August 7th, we had an event, and we predicted that the price of maize will actually be 145 naira per kilo, or 145,000 per ton. Yeah. That was in March. So the lockdown just increased it to 165. But guess what? When government announced that there was going to be a ban or restriction on importation of maize, that just gave it a little artificial. Mm-hmm. You know, they announced in May, we predicted in March. So that even restriction in maize didn't affect it. There was not sufficient rain, and floods happened the year before. Okay. On the U.S. embassy, at the U.S. government portal, there was already prediction for extra 100,000 metric tons. So the ban didn't have
the border closure
had nothing to do with it.
Okay. Now let's look at some of the core issues here. We just talked about what's happening in the foreign exchange market, and we know that a week before the new year, the president met with its Economic Advisory Council and still reiterated his directive to the central bank not to grant foreign exchange to importers of food items and, of course, fertilizer. Yeah. We know inflation rate currently 15%, food inflation, 18%. Yes, you talked about flood, and, of course, we have the insecurity issues, and then having this ban in importation, and then we have this FX issue. Looking at 2021, where does that leave us in terms of food security?
We're not food secure, and we're not likely to be food secure in 2021 if we still go along these lines. So government is putting money in. Government, and I always say this, we have more resources from government's rich players in the last 4 or 5 years than before. That is a fact, and I stand to be corrected. I'm a grassroots player. However, we're not having efficient operations. So the funds come in a bit delayed. You know, by right now, with the rain that fell yesterday, the beautiful thing is that we have data to work with. Recession 2009, the climate and the operations in 2009 is going to repeat itself this year. So what that means is that last year's prediction of, we're not going to have enough food and co, the rain that fell yesterday and day before almost across Southwest and South changed the dynamics. So we're going to have it easy, but we need efficient operations. We need the river basins to be funded, the farmers around the river basins. We need more publicity. National Agency, Orientation Agency needs to kick in. Ministry of Agriculture, we need more information dissemination. We need capacity development. So, but we need government also to have a very robust monitoring and evaluation. I stand to be corrected, but the president is not getting the right information. This year, if they don't want a food crisis, we need to get new teams advising the president. Because
how far did the farmer credit thing go?
Now, you see, yesterday on our radio program, somebody called in to say that, hey, I got the AgSmiths, which is the loan for the small and medium. Said, I don't know anybody. I applied on NISA platform. I got it. I also got the COVID supports. I applied and I got, so it's okay, fine. One of the things that needs to happen is we need to bring you to teach others how to apply. These things are real. It's going out. But many people, the application process for many is faulty.
At least they're beneficiaries.
So they're beneficiaries. But we just need the scale. These are intervention and incentives. So it needs to be more flexible. We need it to get down, and we need CBN to be more proactive. And they're doing a lot. But we need them to ensure that when the money needs to come out, it comes out, especially to the right people. It's not a year to start with new people. It's a year to scale and support the people in the sector and push new people into the value chain.
Of course, the EFCFTA just kicked off January 1. So how will the players in the agri sector be part of these benefits from this?
Well, it's not a comparative advantage yet. It's not it's a potential opportunity that we have. Are we going to harness it? We don't have the structures. So Ghana still has better operations with most of the agricultural products. In fact, West Africa still has more infrastructure to leverage more than us. But I'm very optimistic because we're Nigerians first. Our mind is our greatest asset, and we can adapt. So if we have the right players, the right advisors to the president, we cannot change policies and change it again this year. We need it stable, so the presidency needs to change the people advising them currently.
Thank you very much, Mr. African Farmer.
Thank you so much for your time.
Thank you.
Thank you, and Happy New Year once again.
Same to you. Thank you
Happy
for having
New
me.
Year.
Thank you.
And Commodities market update is next. To stay with us.
Stay with us.
All right, joining us now for updates on the commodities market is one of the research analysts with financial derivatives company, Dumebi Iyeke. Happy New Year, Dumebi. Good to see you. You're looking very good.
Thank you.
Welcome.
Yeah, I'm sure you listened to our conversation with Mr. African Farmer talking about agriculture. He did mention agriculture value chain. And of course, major issues there have been the lingering food import restrictions and currency devaluation. We've seen what is happening in the foreign exchange market. Now we don't even know what the central bank is trying to do there. But how do you see this, driving the domestic commodities market space?
I mean, the first thing that we need to do is to situate the fact that we are still very optimistic about 2021. But I mean, we've entered the year with a lot of uncertainties. Just like last year, we're still seeing COVID cases spike. We're still seeing a lot of currency volatility. We're still seeing, so much happening that one can't really put a finger to say, okay, this is how 2021 is really going to look like. But however, looking at what's happened so far, we can say that 2021 is going to be a year of a lot of reforms, both for forex market and, the general fiscal space. For the domestic commodities market, how this is going to affect, commodity prices, definitely when there's currency volatility, it affects manufacturers. And especially manufacturers that import, a lot of their input raw materials. And when their import cost is higher, it affects their production cost. And every rational manufacturer would want to pass down this burden to the consumers in form of higher prices. So we could still see that play out in the domestic commodities market. Food prices could remain high due to, the exchange rate pass-through effect of, the currency volatility, currency devaluation, and a lot of these reforms, on food prices. Yeah.
So, we've seen a bit of uncertainty in the FX market.
Yes.
And the Naira closed at 410 at the INE window last week. And yesterday, first trading day of the year, we saw the Naira trade at 394. What does this tell us? If you're an investor, what would you do?
I mean, definitely currency volatility for every rational investor is, it's a signal that, let me just take a breather, let me hold on, or I move my money to the equities market. So as a rational investor, what I would do is I would hold on. in every Naira investment right now, because there's a lot of, bumpy ride going on there, and move my money to the equities market. Some might not move, but rather what they will do is hold on, with their investments. Definitely currency volatility, what it does for the investment space is it increases a lot of, investor uncertainty. It also increases a lot of skepticism in that market. So everyone is like, should I not? But every rational investor would want to move where they would make a lot more gains. And a lot of times they move towards the equities market. We also saw that happen, yesterday when the dollar lost some value. We saw a lot of rally towards gold, safe haven assets, and the price of gold really increased as of yesterday. So definitely when that happens to any currency, we would see investors, react in that manner.
Now, do you think the Naira is gradually approaching its fair value? Because some analysts would say that, central bank is likely going to adjust the Naira to its fair value. And when we talk about fair value, what is this fair value anyway?
I mean, if we look at, it just simply means that the currency is reflecting a market situation.
Right.
There's a lot of things happening, and when you peg your currency to a particular level, or to a particular value, a lot of times investors are looking at it that this currency is not really reflecting what is happening in your economy. So that's what they're looking at in terms of fair value. A lot of investors right now are looking forward to a market-driven exchange rate regime. So that is a true reflection of what is happening in your economy. So if your currency is not reflecting that skepticism is still there. So that's why a lot of people are having that conversation, especially the recently concluded IMF Article 4 review. That the IMF was still saying that there is still that need to end the multiple exchange rate regime. So a lot of analysts are saying that right now we might not see that full unification happen, but we will still see those exchange rate reforms towards that process. So the convergence would still continue this year to ensure that face value, that market-driven exchange rate regime is, full blown.
But do you see the CBN adjusting the Naira band again?
I mean, it's a huge talk. It's something that's a huge probability right now, especially with what we saw happen at the IFX window. We could still see that happen with the official rate. There could be that adjustment, but one can't really say. Like I said, there's a lot of uncertainty going on right now, just like what 2020 was. So we can't really say this is the exact move the CBN is going to make. But with what we're seeing, it's a likely option.
Okay, let's look at again what you have on your burning economic issues. They're talking about wheat importation, which of course is above $1.5 billion. So how does this currency adjustment affect wheat imports and perhaps in turn the price of wheat related commodities? We have flour and we have bread.
So generally, whatever happens to there are a lot of commodities that whatever happens, in the global market for that particular commodity, we will see the same effect in the domestic commodities market. And recently, due to the Russian wheat export quota that's supposed to kick in, in mid-February, we've also seen an increase in, demand for wheat and also corn. So that has really buoyed wheat prices in the global market. And Nigeria imports wheat. So when we see that, happen in the global market, when there's an increase in price, and we're seeing our currency, extremely volatile as what's happening now, manufacturers who import this, commodity are going to spend more. That's just the simple mean. They will spend more to buy this commodity. And then, like I mentioned earlier, we would see that play out in their production costs and eventually the price of, wheat-related commodities like flour and bread. And we've seen that happened in the price of flour. The price of flour has increased, by almost 20%, to about 14,500 naira per 50 kg bag right now. And for a commodity like bread that, it's not so price elastic because it's something that almost everybody eats every day. What we likely would see retailers do or producers of this commodity do is they would miniaturize. What does that mean? They would reduce the quantity, so they would create that illusion that the bread is still much.
But
It's not so much, and you can't
Like
really
the
blame
gala
them.
story.
Exactly. So and you can't really blame them because their input costs are really increasing, and people also are battling with lower income levels, so they can't buy as much. So everybody is trying to manage it the way they can.
But how much wheat does Nigeria produce at the moment?
Currently, like what I saw from the USDA report, Nigeria produces about a little over 60,000 metric tons of wheat, and we import an average of 4.7 million metric tons of wheat. So meaning that there is that huge supply-demand gap that our local production cannot service.
Do we have potential to produce
Of
more?
course we do, we do. But the lingering, just like every other agricultural commodity that we've had so much conversations about, the issues concerning the storage, issues concerning the farmers' incentives, issues concerning the irrigation structure, all need to be addressed first before we can, harness our potential. Nigeria has vast resources, especially in agricultural commodities, and not just only wheat. So if these issues are addressed effectively and there is that maintenance culture, we would see our production of several agricultural commodities increase sufficiently to not only meet our domestic demand, but now that we're having talks about regional demand, that would be serviced, and inadvertently we will boost our production so much so that we can now service global demand.
Okay, now going into 2021, looking at some of these issues that you've talked about, domestic commodities space, what's your inflation forecast? This short to medium term?
So generally, we still expect food inflation to be the major culprit of high inflation levels, and this is not only because of the effect of the exchange rate pass through, but we're still looking at the insecurity in major food producing states that are really cutting down on our food reserves. That alongside supply chain disruptions, and right now with the spike in COVID cases, we're hearing talks of a precision lockdown in Lagos. So we saw what happened in Q2 2020, and we could see that happen again. And how this is going to affect, food prices generally. So that would have a huge impact on the entire inflation basket. So that's one. Generally, we're looking at inflation for Q1 2021 to be above 15%. To be above 15%. And the EIU estimates that inflation for 2021, that's for the entire year, to be around 16%. So if that happens, it just simply means there is more damage being done to consumer disposable income. And but on a quarterly basis, actually, due to the combined effect of the AFTA and the border reopening, we're expecting that on a quarterly basis, inflation begin to decelerate, and that's because of the combined effects of those measures or those events or developments on domestic commodities market. They were expecting that their impact would be more potent in like Q3, Q4, and that would also coincide with the harvest season.
So one of the other burning economic issue was the Nigerian Eurobond maturity of the 500 billion. Will this meet the obligation for maturity?
Well, the first thing that I looked at when when I saw that was definitely our external reserves could do justice to that. But as much as if that happens, it's a good thing because we're meeting up to maturity, so that puts us in a good light in the global market, and more investors will be like, okay, so they're doing something about it. But for our external reserves, by the time that happens, there will be a huge drawdown on our reserves, and this would feed into more currency uncertainties, because now the ability of the CBN to keep the naira stable, has been limited again, and this would, once there's more currency volatility, this in turn, would affect manufacturers.
That brings to question if the central bank will be able to sustain, the continuous defense of the naira going into 2021.
Definitely. So that's if that happens, because right now we're not so sure what other means the CBN or the federal government might use to meet up with this maturity. I, for one, as an analyst, when I saw that, I was like, okay, the external reserves could do justice to this because this is $500 million, and the external reserves is about $35.3 billion. So that could do some justice, but at the same time, there would be a huge drawdown on the reserves, and this has a ripple effect.
That now brings us to what's happening in the global oil market. Yes, now we've seen the oil hover around $50 per barrel.
Yes.
Yeah, but then OPEC Plus met yesterday but couldn't agree on the output cuts, and they are meeting again today. So there's still some kind of uncertainty, and we don't know where that will take the oil price. So what's your expectations on that, and what's your outlook on that market?
Okay, so the first thing that we're looking at, so starting with the OPEC meeting, OPEC already had a decision that, instead of us meeting a few times in a year, let's meet monthly to review our, supply, our global oil supply. Right. Let's have that conversation more frequently because of the things that are happening in the global economy. We're seeing cases spike. We're seeing that there's a new variant. All of this, put global oil supply in a very sensitive position because any decision on global oil supply would definitely affect oil price. Yeah. And if there's so much oil in the market, we'll see oil price crash. And everybody wants to benefit. Everybody wants to go home dancing. Yeah. So at the end of the day, they're having this conversation to ensure that, let us come to a compromise. I mean, the main issue why they were not able to, finalize their talks as of yesterday was because Russia is saying let's increase oil supply. Saudi Arabia and some other countries are like, please let's not do that right now because of what's happening, in the global economy. Yeah. So what my outcome or my outlook for that is, I think that they will definitely come to the table to compromise. Why? Because they really have to tread with caution at this time because the market is still extremely volatile, and we don't want a repeat of what happened in Q2 2020, where the price war between Saudi Arabia and Russia sent oil prices down to as low as $18 per barrel in April. So we don't want a repeat of that. So they will definitely, come to the table to compromise.
Thank you so much, Jumebi. Thank you so much.
Thank you.
It was great having you.
Thank you so much.
And Happy New Year to you.
Happy New Year. Thank you. Happy New Year to you too.
All right, let's look at Monday's trading activities at the equities market. Of course, the market kicked off the first trading day of the year with positive sentiment following buying interest in cement companies, BUA Cement and Lafarge WAPCO to be precise. Now, BUA gained about 9.9% and Lafarge went up 9%. Now, some banking stocks like GT Bank also helped to rally the market. The all-share index increased by 2.18% to 41,147.39 points, with month-to-date and year-to-date gains increasing to 2.18%. Now, total volume traded, of course, declined by 70.2% to 211.93 million units, valued at 1.41 billion naira and exchanged in 3,438 deals. ICO was the most traded stock by volume at 87.52 million units, while Zenith Bank was the most traded stock by value at 225.72 million naira. Okay, just before we get our market analyst there to tell us what happened at the market, let's take a quick break. All right, let's talk to Phil Anebe, stockbroker with Cardinal Stone Securities. Good morning, Phil, and Happy New Year to you.
Happy New Year, Phil.
Oh, Phil is gone. Okay, still looking at that market. We're talking about the industrial goods, of course, across the sectors. It was positive yesterday. All indices recorded some gains. Industrial goods was up 4.7%, insurance 4.4% up, banking 3.7%, consumer goods 1.4% up, and oil and gas up 0.1%. Now, market sentiment as measured by market breadth was positive. 31 takers gained relative to 2 losers. Honey flour up 10% and Transcorp up 10% as well, recording the largest gains of the day, while FCMB came down 6% and Caviton were the losers of the day. All right, Phil, good morning and Happy New Year to you.
Yeah, good morning. Happy New Year.
Yeah, so a quick one, yeah? The year 2020 ended in a good note, and now 2021 has started on a good note as well. How sustainable is this rally we are seeing at the moment?
Well, market actually leveraged, or you say speculators took advantage of thin volumes and low offers in the market because a number of fund managers are yet to fully resume for the year. So as they resume, you expect more offers to trickle into the market. That may drive some correction in price. So you may see some price corrections, so price depreciations on the back of offers coming into the market. But for now, what we are seeing is that volumes are thin, and we are seeing a lack of offers, and that is more or less driving sentiment. Added to intention to actually expand its capacity by 9 million tons. Also, in market reactions. I think Vitacom also announced a dividend, and investors actually pushed to that really kindly. The stock appreciated by almost 10% yesterday on the announcement of dividends. So stock activities are likely to continue, but then expect some correction as more flows coming to the market, as more offers coming to the market.
All right, thank you very much, Phil. I do wish you a profitable trading day. Well, Ladi, we can only hope for the best.
Exactly. So we'll take another quick break, and when we come back, we do an open call to London. To stay with us. And for updates from the streets of London, let's talk to Juliana. Hello, Juliana.
Hello. Hi, Laddie.
Hi, thank you for joining us. So new lockdown measures begin today in England, and most of Scotland. PM Boris Johnson warned the coming weeks would be the hardest yet. What's the feel like this morning? Like, what sound bites are you hearing?
Well, to be honest, the mood music in the room in the UK at the moment is pretty grim. I've got to say, pretty grim, pretty dark. I think nobody expected that 2021 would begin like this, even with the surge in COVID cases. And that's because just 6 weeks ago, we were celebrating the inoculation of the Pfizer-BioNTech vaccine. Just last week, we started circulating the Oxford-AstraZeneca vaccination, but we are having an unprecedented surge in COVID cases here. There was one statistic yesterday that a scientist said on Boxing Day, there were about 18,000 people in intensive care with COVID-19 in the UK. Yesterday, there were 26,000. So it was, Prime Minister Boris Johnson felt as if there was no option but to go into this national lockdown. Some are calling this the third national lockdown because we had one in November, but it definitely appears as if this national lockdown that we've entered at the moment is much more stricter. Schools are closed, primary schools, secondary schools, universities are closed. You can only leave the house for very few reasons. One is if you absolutely cannot work from home for exercise, if you are fleeing domestic violence, and if you need to see your doctor. We're told that these restrictions will be in place until at least 13.9 million people are vaccinated. These are the most vulnerable groups. So people over the age of 70, people that work in frontline healthcare, and people with severe underlying illnesses. At the moment, we've vaccinated 1 million people. So there are so many questions and confusions as to when these restrictions will come to an end. But yes, it's not great. And I can definitely tell you that people are not feeling good and positive at the moment. In fact, checking up on your loved ones and making sure that people's mental health is intact is one of the government's top priority.
I can imagine. And just a few hours after Prime Minister Boris Johnson's speech, supermarkets online, their shopping operations came under strain. Customers rushed to book deliveries, and shoppers reported problems with Sainsbury's and Tesco. Is there any development on that?
Well, this is not to be expected. We've seen this in the West. We saw this in March when who would know that toilet roll would become such a luxury item? But yes, even though we have been living under some sort of restrictions in the UK for quite some time now, the fact that more stores have now been closed, and supermarkets really are the only place that you can get your food and drink. Just within a couple of hours after Prime Minister Boris Johnson led that pretty sombre televised address, most of the major supermarkets were reporting crashes. I believe Ocado, if you wanted to go and do your shopping there yesterday, you would have been in a queue of about 5,000. So it is a major issue. I think supermarkets have learnt from what happened last year. So they are going to be prioritising deliveries for healthcare workers, for the elderly. They are asking people to come into shops only when it's less busy, which I believe are between 7 p.m. and 10 p.m. at night. But I think if one thing COVID-19 and 2020 has taught us is that e-commerce really is the way that people want to shop. So if the supermarkets want to make sure they can deliver to people during this pretty critical, horrible time, must I say, in the UK, then they need to make sure that they get their technology into gear.
Yeah. And now with the aftermath of Brexit, some EU specialist online retailers have said they will no longer deliver to the UK because of tax changes, which came into force on 1st of January. What more can you tell us on this?
This is quite an interesting story. And again, there's so much news coming out of the UK at the moment. It appears to be buried, but I'm sure as the days go on, especially as the month gets busier, then it is going to be a story of much concern. There are two companies in particular that have said that they will no longer be delivering to UK customers. These are specialist stores. One of them is called Bike Bits. This is a Dutch firm selling spare parts for cyclists. The other is called Beer on Web. It's a Belgium-based firm, and they've said that they can no longer deliver to their UK customers because of the bureaucracy and the extra charges that they have to pay to comply with new customs rules. Now, VAT is no longer being collected on the point of delivery, so lots of our viewers in the UK that are used to buying heavy-duty goods from the EU would typically pay once you've received your parcel or just before it's delivered. But now these charges are going to be placed on the point of sale. So a lot of these specialists' parts just don't believe it's profitable enough for them to do that. But like I said, it's a developing story. So far, we've only heard of these two companies. But again, this was a Christmas Eve, very, very rushed, panicked deal. The dust is just beginning to settle. January is typically a pretty a slow month for consumerism. So it'd be interesting to see how many more of these stories do start coming out of the woodwork as the weeks go on.
Yeah, I guess we'll just hope for the best. Thank you so much, Juliana. Thank you for your time.
All right, Ladi, let's look at what's happening in the debt and currency market. And my focus, of course, is the currency market. And I have Ajibola Aero-Phillips, Head FX Trading, FBN Quest Merchant Bank. Hello, Ajibola. Good morning and Happy New Year to you. Welcome back to trading.
Good morning. Well, Happy New Year.
Happy New Year.
Happy New Year. Now, you are a trader. Please tell me what's happening in your market.
We're still trying to make a sense of the last few days, especially the last day of trading of 2020 and then the first day of trading of 2021, concerning the rates as well as CBN's intervention at the level where CBN has intervened. You're aware that rates closed at the high, the record low towards the 2020, with rates touching 410. But yesterday, CBN intervened again in the market and back to the adjustment of about 395. So market is still warming up and trying to make a sense of what exactly is going on. So market right now, we're open today at 394.6 or 394, 395 levels. Volume are still really low, and that's just because not everybody's back at work yet. So this is typical of the market generally in terms of market volume, but in terms of rates, we're still trying to find an equilibrium level of where the rates will finally settle for the rest of the week.
Now, Ajibola, if I'm an investor and I want to play in your market, what would you tell me as a trader?
I'll tell you, bite the bullet and take it and move on. I mean, the 410 was an anomaly at the time that it happened, and then this just looks like we're back to the level where we were before the rates rose to those high levels. So it looks like we might be settled around here for this week. We're going to take a cue. Market really is going to take a cue from what happens with the central bank as well as the retail investors from OCO later this week. So I would say if you are an investor, maybe this week is not the best time just for market to find an equilibrium level for it to settle.
Okay, I'll take your advice, Ajibola Aero Phillips. Thank you very much for your time. Well, Adi, just wondering, would you prefer to play in the FX market right now or your Bitcoin?
Well, I remember Juliana told you yesterday that after you,
after me,
then she would also.
As long as the Bitcoin and of course now the currency market is concerned.
So I'm also waiting for you. Yeah.
Okay, don't worry. We'll take Ajibola's advice in this regard.
Okay, no problem.
And that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.